We have this idea that AI is either going to kill us all or it's going to be just the nirvana for everything that has ailed us in the past. And I know there's a lot of nuance that goes in between that. But all of the hype that we've seen since ChatGPT kind of came onto the radar 2.5 years ago, we are starting to see some real ROI for some of the companies that have deployed AI, whether it's to their clients and customers or internally to themselves. And I am curious if you expect to see that really start to show up in the earnings results that we're going to get over the next few weeks?
I think in the form of earnings over the next couple of weeks, there's a couple things I'd point out. You're likely going to see very strong, if not re-accelerating revenue from the cloud computing companies. Mm-hmm. We would highlight AWS within Amazon, which you talked about in your last segment, and elements of Google Cloud within Alphabet could particularly surprise more to the upside than not. Microsoft surprised very positively last quarter with this theme of going from capacity constrained to less constrained, and then all of a sudden the AI backlogs turn into revenue. Secondarily, the advertising landscape is an area where we're seeing old practices turn into new practices. We're seeing AI as a bit of a democratizing effect on how advertising is made and deployed. We think that's going to build in momentum. We also think on the margin side of the equation, you're going to hear a lot more about efficiency narratives inside these companies, doing more with the employees they have, or even some elements of redundancies leading to better margin trajectories going forward as well.
How much wiggle room is there, though? Because I felt like that was a big narrative a year ago when we saw Meta and some of these other big companies really start to pare back the number of employees that they have with the idea that there was a lot of overlap.
And there was an outsized redundancy move by Meta a number of years ago, and they've been in digestion mode of that since. And if anything, Meta has moved into hiring some very high-priced AI talent in the more recent weeks. But there are press reports around layoffs at Alphabet. There's layoffs at other technology companies in Silicon Valley. And more interestingly, the rate of change or new employee hiring has been relatively flat in the technology landscape, as shown in some of the macro data as well.
When we talk about the potential help to margins by the idea of pairing the workforce, and Microsoft announced 9,000, or we have reporting 9,000 jobs apparently being paired there. They're still spending a lot on capex to build out and chase this AI dream. And I am curious about the balance. I mean, getting rid of a few $1 million in salary isn't necessarily going to help the idea that they're spending billions and billions of dollars on capex. Where's the balance?
Yeah, I think it's more than just millions. I think there's also processes and workflows and way in which they work internally. So Alphabet's really an interesting company because going back to when Ruth Porat was CFO and now the new CFO, Anand Ashgasani, I think at the end of the day, what they talk about are elements of striking a balance. If we are going to keep investing in AI, we have to find efficiencies in the core business. And generally, these are companies that have been surprising more on margins to the upside than the downside. So they are finding elements of those balance in their own operations.
When you hear people become concerned about the capex spend, what is your response to that?
Well, I think the capex narrative has been on an evolution. When there was nothing to pinpoint that could measure return on capex, it was a little bit harder. In a note we did recently at Goldman, we tried to move the narrative forward a little bit because what had been happening was, I'm spending a capex dollar, is that good or bad, but how do I measure it? Now what we're trying to do is identify different profit pools that could possibly move from legacy practices to newer AI-led practices. And if there are profit pools you can identify, then all of a sudden you have a dollar amount where you can actually measure ROI. And I think that's what investors have really been looking for. It's one thing to say capex dollar, cloud computing revenue. It's another thing to say, how does the AI generate revenue? So we've been trying to move the debate towards that. We're in the early stages of that debate, but I think that debate has to prove out for AI to actually be a technology that scales and earns a return.
And for investors looking for the potential winners in all this, for the last couple of years, it's been a pretty narrow field, at least the ones that in the public markets, obviously NVIDIA, some of the hyperscalers. Are you seeing more of a broadening of the AI trade or the AI opportunity trade?
So I think coming back to this profit pool theme in the advertising industry and the note we just wrote, yes, there was a huge section around Alphabet and Meta, and we are buy rated on both. There also was a section around Pinterest and how they're building an AI platform called Performance Plus. That doesn't get anywhere near the coverage that maybe a Meta or an Alphabet does. We are neutral rated on a company called AppLovin, but we said, look longer term. This is another company that you have to keep on your radar screen from becoming more AI first than not going for the longer term. So there are companies out there, again, anchored around some of these industry shifts and practices and themes that we would articulate to watch.
When we start to talk about the use case, the end use case for AIs, to this extent, a lot of at least the more profitable cases seem to be in the corporate space, corporate software, SaaS, agentic AI. On the consumer side, where are we with that beyond just me going to Perplexity and having them ask how to help me plan my vacation?
Well, the secret with consumer internet is there's only three ways to monetize: subscription, commerce, and advertising. We've been at this in the internet for a long time, so consumer internet is going to see all different flavors of that. I'm a Google Gemini Pro subscriber. I'm also a ChatGPT Pro subscriber. I'm paying a subscription to have access to these services. The vast majority of individuals typically monetize not through subscription, but through advertising or commerce, and we think there's going to be elements of all of that at play in the AI world as we move from adoption to utility, which is always the bridge. Whether it was desktop computing or mobile computing, AI is going to be no different.
Do you think those subscription fees are going to go up significantly?
I have yet to see a subscription fee in my coverage of technology over 20 years that's gone down.